Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Friday, November 4th. This is your end of day as well as end of week market video. So let's get down to the price action today. All over the place in terms of the price action for the indices as well as movers this today, and just a full plate of events this week too. So I think that may have something to do with it. There's a lot of movers today. We'll go over some of those in just a minute, and then of course today was the jobs day. So you've got this mix right now of big macro data that's been on the tape. We had a Fed meeting this week. Jobs data today. We also have next week, we've got the CPI report, and all eyes will be on that because it's all about inflation right now, and then in turn interest rates. So for the day, what did we actually had a fairly positive day. The Qs led up 1.6%. Like I said, even though that the price action was all over the place, I'll go over some key levels to watch. The small caps, the diamonds, as well as SPY, were all up about the same, about 1.3, 1.4% today. Bonds sold off again today. And then one difference was what the dollar did today, which was much weaker today. Gold, silver up a lot today. I'll try to go over those charts as well. Let's talk first things first, the jobs report. So a couple things here. The data that came out, the change in non-farm payrolls, 261 versus 193. Yes, that beat expectations. Same thing with the private payrolls. But overall, is that a big number or is that a low number? In my opinion, it's kind of a low number. And, again, I'm just kind of piecing together why there was the reaction that we saw today. Normally right now, what the consensus is that good news is bad news. Why is good news bad news? Or, why is a beat bad news? Because right now, Powell wants this economy to slow down, especially the jobs market. Therefore, they can pump the brakes on raising interest rates, which, of course, as we know, is a headwind for stocks. Even average hourly earnings went up 1/10 of a percentage point, 0.4 versus 0.3. So what's kind of puts things in perspective a little bit is when you open this up, right, and you look at, oops, that's maybe not the one that I wanted to go to. Maybe it is. Let's see. Change in private payrolls. I think this is what I wanted to go to, but it's not showing me what I want it to. So let me try one more time. I was on the screen earlier. Let's see, maybe it's just the there we go. This is this. So here's what you have. And if you look at this over the last couple of years, you could see that even though we beat expectations, the job number really wasn't that strong. And you could see like the major component right now is still services. Right, we've talked about how that's lower paying. That's going to be sticky because during COVID, small businesses could not find workers. So now that they have them, they probably don't want to let go of them. Higher paying, you could see, is kind of slimming out a little bit. We are hearing about corporate layoffs here and there. It seems like every day there's another company that's announcing some type of layoffs. So that's probably why that number is getting a little bit slimmer. And mining is also very small in this number too. But again, you could see the trend here. It's not a particularly good trend, so that has something to do with it. Since I have the economics page up, very interesting next week. And again, if anybody knows on the video, there's comment section. They could send back a note to me on this, because I don't really understand who sets the expectations for this and how that they are setting the expectations. Is it seasonal? Is it something else? Because look at what they're expecting. This is for Thursday next week when we get the CPI report. The expectations are month over month 0.6, 0.5. Remember what happened last month. So let's go back a month. So remember, they're looking for 0.6 as well as 7.9 for the overall number. Now let's go back to last month. See if this number will come up. The expectations were so light last month. So why is that, is my question. And I don't have an answer for you. But the CPI number came in at 0.4 versus 0.2, and the market didn't like that very much. also 8.2, 8.1, right? So now let's go back to I guess my question is, if this number comes in 0.4 on Thursday, in this case, does the market rally because they're only looking because they're looking for a 0.6? So that's going to be very interesting, and I don't have the answer to that question yet. We're going to have to wait. That's on Thursday. The CPI year over year, they are looking for a little bit of a lower number, 7.9. Again, I don't know how these numbers are set, the expectations numbers, but I find it really interesting that last month they were only looking for 0.2. And we got 0.4, and this time they're looking for 0.6. So it looks like the expectations, all things being equal, it looks like the expectations are for a hot number, or for a higher number of 0.6. Well, so that's what the expectations are. Perhaps that's a chance for this to come in a little bit lighter, considering that the bar is that high. So we talked about the overall indices. Let me go over, there's really some key levels. You know, right now we're dealing with a market that is making lower highs, and it seems like the points where once we kind of break down, because when we're going down, it's like a hot knife through butter. There's no problem. You know, here was the Fed day resistance, and then of course we continue to go downward after that Fed meeting, the press conference, and have continued lower. Notice that we fought back today. The problem is that when we hit this short-term resistance, half the time we're getting rejected. And today was a pretty decent rejection to the downside. But as I had mentioned earlier, the price action is extremely whippy. You could see this on the 5-minute today, right? This was the high point right around 1040 today. We hit that resistance that I mentioned on the 1-hour chart. It's also resistance on the daily chart, which I'll come back to. But look at it's just like straight down for over an hour. Stabilization back and forth, and we actually recovered quite nicely at the end of the day. But really difficult to kind of situate your trades. You know, if you pick the wrong time, you're going to get you're going to have a hard time. So I mentioned that there was the 1-hour resistance bottom of value. More important, more significant is the daily chart, and notice where that price stalled out here, right where it kind of needed to turn. That's the 37.90 level. Remember, this was support earlier in the week. Now it's resistance, top of value, which is based on all the volume and price activity from October. Also the 20-day moving average, and also I think the 5-day moving average as well. So we're still, even though the market was up 1.2% for the day, we did not retake anything that was significantly important. All right, so that will remain next week. Until then, I mean, what I try to do is position light. I also try to carry a hedge when we are below all the moving averages like this. I always short the weakest thing, which happened to be the strongest thing today. But let's go over just to NASDAQ to see how that looks. Again, nice bounce, 1.3. You can bounce in a downtrend. But same thing here. There was no significant territory that was taken back. We are still below value. That's 10,918, or if you're a Qs follower rather than NASDAQ futures, it's 266.63. And we're also below all the moving averages, the major ones. I don't have the 100 in here, but here's the 200, here's the 50, here's the 20, and here's the 5 as well. Prices below all of these. Now, that's kind of the negative. Positive, if you've been watching my videos, you know that I've been talking about the small caps up about the same thing as the S&P, but instead of falling into the value area, this is actually held up quite nicely and holding this 175.76. Also above the 50, the 20, and right at the 5-day moving average. So again, we call that relative strength. And for now, it looks a bit more healthy to me. Still in a downtrend, and that's the important thing to realize. And the 200-day moving average is sloping down. So there's going to be a battle for this thing to go and get out of its downtrend. Then, of course, I've been talking a lot about the Dow. I've been talking about how everybody talked about how this hit the 200-day moving average. I said, well, don't get completely negative. It doesn't mean that we drop all the way down. You kind of have to take the price action for what it is. I wouldn't assume anything, but we are back but we tagged that 200-day moving average. and we could not get through it. I actually, I don't want to call it an error, but I bought, close to around the 200-day moving average. It didn't work, and I unwound a trade. So I lost money on that trade today, which is fine. Again, I always talk about the winners and the losers. I know some people think that they're only going to have, winners in this market, but that's not how this works. I always talk about too. These are things. We did a really long midday session today. I had a special guest on today. One of our members spoke, which was really nice, but we actually went on for quite some time. But I was talking about how, I lost money on 2 trades today. And I said, that's fine. I got out of them, and, I could have actually stayed in this Dow trade, but that's fine. It's irrelevant. But in this market right now, you're going to have down days. Really, you don't want to compound those days to make them worse than one day, right? One day of a loss is not a big deal whatsoever. If you've been trading well, if you've been, mixing in some good days, then let that work its way out. Don't get stubborn in this market. I'll go on and kind of give you some examples, but I think, there's going to be a lot of things to watch next week. We're very close to retaking this 200-day moving average. I think that'll be very interesting if that happens. There are some sectors that are actually, look at the industrials today, above the 200-day moving average. You've heard me talk about those quite frequently, but again, I just view that as a positive right now in a pretty difficult market. Before I talked about some of those movers, I wanted to talk a little bit more macro, just very quickly, because this stood out like a sore thumb to me. The US dollar is now testing that 50-day moving average again. So remember, when you keep testing something, whether it's to the upside or to the downside, eventually you keep knocking on something, either when it's resistance or if it's support. If price keeps knocking on it, it has more of a tendency to break it. Look at how many times we've been testing this 50-day moving average. Remember the last couple times, right? Back in June, right? And this is a much lower level, by the way, but we kind of just, hung out here and just, glided back up. Even back here, we spent very little time. There was 1 day, 2 days below the 50-day moving average, and then we got right back above. Notice this time we got below it. We managed to get back above, stalled out here, tested it again here, tested it a day before that, and actually closed right at it. So we're leaning to the downside here. I wouldn't be surprised if we come down here and take out this 2940 VPOC. So again, big down day for the dollar, down 1.9%. Now, so that was pretty good, and that was one of the reasons why I was kind of trading a little bit more active today. I like that dollar weakness. Usually it means risk on for equities. However, when you look at bonds, this was not confirming for the day. In fact, bonds had another down day, and we're hanging on here by a thread. Really, this 119.03 and the 30-year bond futures, a must-watch level for next week. If you're in equities, you probably want to see this hold the bottom of value, and if it breaks, then we're going to have some more issues, and I think really severe issues if we start to take out those lows for where bonds were back late October. It's not going to. I don't think that's going to be a very pretty picture for equities. So. We've got a lot of levels to watch for next week, and I will say this too: this market has gotten extremely interesting to kind of watch all these macro moves, all these earnings moves. I would say too, and of course the video is for information purposes only. I'm not giving out any advice or recommendations, but it's okay to kind of sit this out a little bit while these things are kind of grinding around or hanging around these important levels, right? You want to make sure, you want confirmation, in my opinion, right? You don't want to just start saying, okay, I think this is going to hold, I'm going to start taking longs. This is too dicey, in my opinion, to really be taking any major risk when we're just sitting right above, by like 10 cents above support, right? That's not something to really go on. And same thing with the S&P, sitting just below that resistance level, and IWM just above support, right? And the Dow right below the 200-day moving average. Like, these are pivotal points. So around pivotal points, what I do is not risk a lot of money. And make sure, if I do have some swing trades on, which I do, I make sure that I have a hedge on. Okay, so that's my quick, strategy right here. Again, no, in no rush with this market, with everything that's going on right now. Now, here's where it gets really, really interesting. Amazing to see some of the movers today, especially some of the software names, as well as just what we referred to as high growth a couple years ago, just really getting clobbered at this point. Twilio in one day down 30%. I don't have, this is just over $5 billion companies. I think if we move this down to maybe 500 million, you'll see the Carvanas in here. I mean, it's 38% in one day. I mean, it's remarkable, some of these moves that are taking place, especially to the downside. Look at how many areas were down over 20%. And if you go through, like an Appian, right? That was another darling, a Cloudflare down 18%. And I didn't even think that their earnings were that bad. Team was down 29%. So, I mean, these are just colossal moves to the downside. So I think 52-week lows, right? And we could look at this here. It probably will take a minute to come up, but you're actually going to see some, I believe, some expansion in new 52-week lows, especially in NASDAQ names. So, look at like even a Coupa Software, which didn't have earnings, was hit pretty hard today. So again, a lot of different things going on. There's a lot of risk out there. And the names that moved up today, again, there's some really good things that happened on this side. Look at PODD was up 22%, right? And there's a number of other names in here too, which I'm not going to go through all of this, but again, to me it's really a lot to get your head around to see this many things that are moving. There's been a lot of comments about the VIX. Why isn't the VIX going higher? Well, there's a couple of reasons for that. People, and this has been going around a lot, that people are already hedged, right? And they're not buying more protection, right? When you start to reach for more protection, right, then volatility increases. Remember again what the VIX measures. It measures 30-day volatility, implied volatility in the SPX, right? So the S&P, that's it, right? It doesn't measure all these intraday moves like this, right? So it's important to realize that, but I do find it interesting that the VIX is only around 25. Now, there's been other times we talked about this, and I don't have this screen up from earlier, I don't think. But keep in mind, geez, I wish I had this screen up from earlier. But if you go back to, again, I don't want to take too much time here, but again, I just find it interesting that if you go back to, let's put in 2006, and again, I'm not doing this to compare what we're dealing with now to 2008, 2009, because every pullback is different. There are too many people who are trying to compare every little move that happens in the market to what transpired back in 2008, 2009. This market is very different, right? It was the financials that were in trouble. We don't have that situation right now. There was also massive leverage in the system in 2007 and 2008. That's not the case right now. But keep in mind, remember, and I was showing an S&P chart with this, just as an example. Okay, again, we're not going to follow this this correction exactly like that. Remember, the same thing happened when the market was selling off in 2018. Everybody has 2008 in their memory bank and saying, oh my God, this is exactly what's going to happen next. Every correction is a little bit different, so just bear that in mind. But notice that we hung around about 25 or 30 in the VIX for a good portion of 2008 before the VIX really cranked higher. So, I had a chart of the S&P up earlier. I'm sorry, from back then. I think I was looking at XLF over that time frame, right? And if you look on this. And let's see if I could just move this back really. See, that's not that bad, right? We really didn't. The VIX didn't start to spike till here, right? Back in September of 2008. So This was a big move down, and the whole time the VIX was like around a 25 or 30. So again, just to kind of for people to understand that this big move in the VIX didn't happen until about 2/3 of the way down in the S&P, or in the this is XLF, right? And then we did this last leg lower. So again, just bear that in mind, that the VIX is still at a relatively decent level, even though it's way off where it was a couple of weeks ago in the 30s. So that's basically it. I wanted to go over just a couple charts just so I can give you some taste of some setups. This was a name that I added to. I actually posted this. So why do I like this setup in DXCM? Because it was a strong earnings name. It's digested some of that gap up. You can see a little bit lower volume today, and it's trying to make the turn right at the 5-day moving average. I went ahead and went long in this name today. I actually hesitated a little bit. I was in a little bit too early. Again, it's very difficult to kind of position into some of these trades that you're looking for swing trades. One of the best things I think you could do is kind of leg into the name, or just wait until the first couple of hours of the day are over. It seems like it's a little bit too volatile in the first couple hours, so you can kind of wait a little bit. The problem is that some of these names take off. The other thing that was pretty interesting today was the move in copper and in silver. Copper was up 8%. I think part of this was obviously what's going on with China, potentially that they're lifting some of those COVID regulations that they have, but really nice move in silver, and we'll see if this kind of continues a little bit. One name I was watching, I did not add anything in this space, but I like WPM. This is another name that I've mentioned before as SCCO on the copper side. It gets out of this range. Maybe we see a move up to the 200-day moving average there. Again, just something a little bit different. Of course, FCX was also strong. Possible that this can get over the 200-day moving average, but there may be some trades in this group. Right, we'll see if how the dollar handles this move down today, and we may see some of these silver type names, maybe even a little bit of gold rally a bit. So that's a preview for next week. Guys, have a great night and a great weekend. I'll see you back next week. Please go ahead and subscribe to the YouTube channel, and as I mentioned, I will have some type of a special new member special for the end of the year. All right, for the last 2 months of the year, we'll have a little bit of a discount for that. So you could reach out to me for that, and let me know if you have any questions. Thanks so much, guys.